The Fed is reporting annualized GDP of 4.5%, which is incredible in this market. But in this video, I'm going to show you how to look past all the graphs, the numbers, and the details, and actually see what the reality and the truth is, and what effect this will have on risk assets and crypto in general. Before that, where are we in this crazy crypto world that we're in at the moment? We have passed into the box. We have touched the 100-day EMA once from that pullback from Mt. Gox and various other issues. And it looks like the bulls are rallying the forces to try and attack this elusive downward bull flag resistance line. We have seen a bit of a rejection of it, which I'm not surprised. There's a lot of shorts at that line. Let's see if we can finally push through that. Now, at the end of this video, you're going to see how easy it is to make all of the information that is out there, that is pushing that the economy is amazing, a complete lie. And how this information will actually push towards a better understanding of where we are and how you can actually trade these charts. This chart's an interesting one. It shows how global liquidity affects crypto in general. If you look carefully, when there is increasing liquidity, you see a bull run, and when there's decreasing liquidity, you see a bear run. If you look here, we are getting to a point of increasing liquidity. This is a sign that there is going to be a bull run. But it's not all hunky-dory. If you look at existing home sales, they're decreasing. If you look at the actual stock of builders, it's increasing. These are not good signs. If you look at durable non-frame aircrafts and parts, which is usually an indicator of how strong the market is, there is a red. The last time there was a red, there was a recession. This is not good. But there is massive growth. If you look at GDP, at the moment it's 2.5%. How does that make sense? How do we have a decreasing market? Housing market is going down, but liquidity is going up and GDP is going up. Markets are booming, but people have no money in their pocket. How is this conducive to what the Fed is saying? Well, here, ladies and gentlemen, this is how you look past what the Fed is saying. You look past the narrative and understand that the market is really not in a good state. The US market is on an extreme downward trend, and the only thing that is keeping up is the enormous expenditure that the US is providing into the market. Its debt is at an astronomical level. That, combined with high interest rates, means that this is unsustainable. And the only way that they will be able to sustain this is by a rate cut. What this is showing is that you don't look at GDP. You don't look at any of the other indicators that show what the Fed is stating, but you look at their expenditure. This is unsustainable. This nullifies all of the other aspects. 2.5% GDP is because the government is spending that money for pushing growth. We've shown in other graphs that each dollar being spent is reducing the amount of GDP being brought out of it. There's only so much more they can spend to get this growth going. And the only thing left they can do is a rate cut. So where are we now? In my opinion, we have one large leg left, and that leg is completely dependent on this rate cut. This rate cut is the fundamental fact of the next push up. We need this rate cut to happen sooner than later, and it looks like it's going to, because it's unsustainable. This election cycle is the last step before the massive banana growth. Be careful where we are. There's going to be a lot of chop. We're attacking this line, but that attacking line does not necessarily mean we're going to break it. Be careful. work your numbers, put your stop losses, and check out all the channels that I have on my page. There we have up-to-date information. There we have an understanding of what's going on. There's a real general discussion on where to go forward. Look at my other videos on my channel, see where this is going. I'm Alvarez, a 7-figure crypto investor. Like, share, save these videos. No one is showing you these graphs. No one is showing you these understandings. And I seem to have a knack of knowing where the market is going. Anyway, peace. Catch you guys later.